Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Ron Benegbi, CEO of Uplinq, to discuss why it's important to expand access to capital for SMBs and help more entrepreneurs get their foot in the door. Ron, it's great to have you with us. Welcome to Trade Talks.
Thanks, Jill. Great to be here.
You got it. And to start, can you share what drew you to the world of credit assessment and SMB lending in the first place?
Yeah, it's a very personal story. I'm an immigrant. My family migrated to Canada in the early 70s. We were poor. We had no money. My dad was baking bread at night to put food on the table. And in 1973, I know I'm dating myself a little, he went to a bank and he asked him for a small business loan, to which the banker told him, Mr. Benegbi, you really don't qualify for how the bank lends to small business. However, I believe in people. And here's $5,000. My dad took that $5,000 in 1973. He started a small business, and that really became the backbone for our family's lives in a new country. And I share that because small business is very personal to me, and certainly what's happened the last few years to all small businesses globally through the pandemic and now going into these uncertain economic times and conditions, access to fair and ethical credit has never been more difficult for a small business owner to obtain. So hence, Uplinq.
Mm-hmm. And you founded a number of startups in the past. What makes Uplinq stand out?
Well, it's a bit of an unusual story. Traditionally, with startups, you have an idea, you maybe go and raise a little bit of money, you sit in a basement for a few years, and then voila, you've got like the greatest product since sliced cheese was invented. That's not our story. Our story is quite a bit different. What we've done at Uplinq is we've taken a product that has been in market for over 15 years, that had accessibility to over 10,000 different sources of data in 150 countries, that have passed every regulatory test on this planet and more, and that have been a part of over $1.4 trillion in lending origination, and we've brought it to the market under the brand of Uplinq. So certainly the narrative has really resonated with some of our customers, being large banks, and it's not a typical startup story.
How exactly can Uplinq's technology help the average small business, and how does all of this pertain to financial inclusion?
Yeah, so what we do is we bring in environmental, community, market data to help a small business lender better evaluate risk and credit worthiness of their small business customer. Ultimately, it lends to significant increase in loan approval. So one example, we helped one of our recent customers in the US. They were declining like close to 95% of all applicants. We were able to show them through our process, through the data that we brought to the table and the methodology and the science behind our application, where they could actually approve close to 70% of all applicants within their existing credit box. So hence, we're making working capital available to a lot more small business and including a lot more of the day-to-day small business owner through our tech.
What are traditional lenders lacking when it comes to supporting small businesses?
Yeah, well, traditional lenders have been doing things pretty much the same way forever. They ask for 3 years financial statements. They'll overlay a credit score on small business, of which most have proven to be statistically inaccurate, but they don't look at the ecosystem or the environment around the small business owner. So if it's a retail store, how much foot traffic are you getting? How is cars, like how much cell phone coverage, what is going on in the local neighborhood? So what we're doing is we're actually taking environmental, government statistical information, data, community data, and we're bringing it to light to help give these small business lenders a greater perspective on the true financial performance of these of their customers.
So, Ron, can you help us illustrate what's wrong with the status quo today? If I may play devil's advocate for a bit, banks are in the business to make money and assess their risk, right? So, of course, it's going to be a little bit more risky taking on an SMB, particularly someone who it's their first time as an entrepreneur or starting up a company. So what's wrong with the way it exists now? Is it a combination of the two, where we have to take that newer technology and integrate it into how we like us and how you lend from a legacy perspective? What's going to make it better from a holistic perspective?
Yeah, well, small business has traditionally been an underserved segment in financial services. Nobody would ever argue that. But the process has been, give me 3 years financials. Well, most small businesses today don't have 3 years financials. In fact, the DNA of the small business owner since COVID has changed radically. And we've got close to 98% of all small businesses in the US are less than 10 employees. So, and they're relatively new. And by the year 2030, that's going to be like almost 100%. So they don't have 3 years financials. And if they do, they've self-reported it into QuickBooks. On top of that, you've got a credit scoring system that is broken. You've got the bureaus, the rating agencies, the FICO scores, who are basically building a one-size-fits-all model to evaluate a small business financial performance. So whether you're a restaurant owner in Manhattan, a plumbing supply store in Kansas, or you're an agricultural wholesale in Northern California, it doesn't matter. The credit score looks at you the same way. The credit score doesn't even evaluate what loan you're applying for. So if you are applying, whether you're applying for a $5,000 credit card or a $250,000 line of credit, it doesn't matter. It doesn't look at that. So it's a completely antiquated and broken system. And we're simply bringing additional data that we've used in over $1.4 trillion in lending origination over the last 15 years that have been approved by all local banking regulators to provide our banking customers with insights that really help them feel comfortable about making a better and more informed credit decision. I hope that answered.
And if we look more from a macro perspective in current market conditions, we know the stock market started off 2023 good, right, relative to what we saw at the end of 2022, but there still is volatility in the marketplace, cost of capital is higher and so forth. So when you think about it from a macro perspective, what are your thoughts with the small business lending space?
Well, we saw, like, late last year, we were at the American Bankers Small Business Conference in Nashville, and all the buzz, and you're going to hear a lot about it if you haven't. The banking regulator, and specifically Section 1071 of Dodd-Frank, which is going to take effect in a couple of months here in the US, is going to look very closely at all of these highly regulated institutions with respect to how they're lending to small business and if they're lending with bias or without bias. So now when you talk about immigrants like myself and my family, protected classes, people of color, just minorities in general, what we're seeing is this has become a very important topic in the banking space, specifically in small business banking, because a lot of our customers, quite frankly, are really nervous that they're not going to be able to meet these new regulatory requirements.
And finally, to wrap up here, let's talk about Uplinq specifically. Any new partnerships or developments in the pipeline that you want to share with us today?
Yeah, there's two really exciting. One is we just signed a big partnership with the SME Finance Forum. They're part of the World Bank Group. So we're doing a lot of great things with them, and especially the World Bank when their mantra is about, helping, underserved markets and helping businesses get access to working capital. So we're really excited about that. And the second I would mention is Equifax, who's becoming a great partner of ours, and basically two companies who leverage data to help financial institutions make better decisions. So those are the two that I would reference.
Certainly exciting start to the year for sure, Ron. Appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Jill.